Good morning, traders, and welcome to BCR's morning market outlook. First up, let's have a look at the US dollar. The DXY is still holding around 101.25, staying near recent highs as markets assessed renewed tension in the Middle East and await this week's US CPI, PPI, and Fed Chair Kevin Walsh's testimony. Traders are currently pricing around a 71% chance of a September rate hike, keeping the dollar well supported. Technically, the index remains above the Bollinger Band midline, suggesting that the broader uptrend is intact despite slowing momentum. Resistance sits around 101.5 and 101.8. Support is seen around 100.55 and the psychological level of 100. Turning to crude oil, WTI has surged above $80 after renewed US-Iran tensions and fresh concerns over supply disruptions in the Strait of Hormuz. President Trump announced plans to reimpose a blockade on Iranian shipping and introduced fees on vessels using the waterway, adding to supply concerns. This week, traders will also watch US inflation data, inventory reports, and comments from Fed officials. Technically, momentum has improved with resistance at 75.73 and 76.95 already under pressure. A sustained break higher could expose $90, while support is seen near 75.73 and the psychological level of $70. Next up, let's have a look at spot gold. Gold has fallen below $4,000 an ounce, extending losses as rising oil prices have lifted inflation expectations and strengthened the case for higher US interest rates. Markets are now focused on Fed Chair Walsh's testimony, along with this week's US inflation and retail sales data for further policy clues. Technically, gold continues to hold above and around the key $4,000 psychological support, but repeated failures to break above 41.84 and the psychological of $4,200 suggest bullish momentum remains quite weak. A break below $4,000, a sustained break below $4,000 would shift focus towards 39.41, while reclaiming $4,200 would be needed to improve the short-term outlook for gold. Lastly, let's have a look at the Australian dollar, which is trading near 69.20, close to a 3-month low as geopolitical tensions continue to weigh on risk sentiment. Hawkish comments from the RBA have helped limit losses, with markets now pricing in a higher chance of another rate hike later this year. This week's US inflation data will be a key driver, as stronger US CPI could lift the US dollar and pressure the Australian dollar. On the upside, resistance comes in around 69.80 to about the 70 cents, which is a psychological level, while 69 cents and 68.50 remain the key support levels for the Australian dollar.